Hello, hello, everybody. Happy Friday or happy whatever day it is that you're watching this on. My name is Ryan Graham, Community and Council Realty Group of Keller Williams, and I'm here to give you a market update. It is July 14th. We are right in the throes of summer. We are sort of in the back third of the selling season of the Atlanta real estate market. It's been quite alive and well. We obviously had a big change in the market back in October when interest rates went basically from 3% to 7%. And that made the music stop in our industry nationwide for a while. It's not to say houses didn't sell. Of course they did, but there was definitely a good 3 to 5 months where things felt noticeably different. And things are still different. Now, starting back in March, the spring selling season ramped up as it always does, and houses started selling, and it kind of felt like normal. But when I say normal, I mean normal like maybe from 10 years ago or maybe 5 or 6 years ago. Certainly what we dealt with the past 2 or 3 years was anything but normal. But let me just give a little bit of context for what I'm talking about in terms of some charts, right? So first thing I always like to look at is average sales price, right? This is going back 3 years, and you can see the little seasonal ups and downs. And while we did have a little bit of a more dramatic dip in the winter, driven by those interest rates, you can see the pricing is back up, to where it was before. So we're not seeing any declines in pricing per se, as far as a trend line is concerned. And if anything, it's still probably on the upward trajectory. The temperature of the market, I like to always look at days on market. That tells us how quickly houses are selling. It slowed down a little bit, so it was taking longer in the winter months, which is always true. But now it's come back down to an average of about 29 or 30. That is up, right? That is up from what we were seeing in the lows of last year and the year before, 20, 17, 18, right? Those are low numbers. If you also compare that to what we call months of supply, these numbers down here, you guys have heard me explain this before, but this is just an indication of inventory. And when inventory numbers are at 1.1, 1.2 back in 21, 1.1, 1.1 back in 2022, like that's an insane seller's market. That is an absolute lack of inventory. It's what drives crazy increasing in pricing and all that kind of good stuff. It may not seem like a lot for it to get up in the 2.5 range or 2.2, but I mean, it's more than 100% more inventory than what we had before. And even though things have been selling and we're seeing the pricing, right, stabilize, that's what we've been seeing. And you see these numbers are still at 2.1, 2.2, 2.3 currently, right? They're not back down to this 1.1. So that's different, right? A couple years in a row in the spring, summer markets in the ones, currently we're up around 2. So that's an indication of increasing inventory. It's an indication of a market that's moving away from a seller's market towards a buyer market. Let me be very clear. It is still a seller's market. It's just not as insanely crazy seller's market as it was the past couple of years. And then one last thing I want to quickly look at: percent of list price, right? So when a house lists originally, what the price is versus what it sells for ultimately, we were seeing things that were 98, 99. I mean, we were averaging above list price for the entire Metro Atlanta market. I mean, that's crazy. And 102% of list price is the average. Like that's a moment, right? That's probably a once in a career kind of moment for me. In the winter, it dropped back down to 94%, which is fairly low. It's lower than it's been in a while. Currently, we're up around 98%. Right, these are still seller-friendly numbers, but it is an indication of things that have changed. We didn't see numbers drop below 98% since what was this, August of 2020 was the last time those numbers were below 98%. So those are some data points that I wanted to share with you to kind of give you a sense of where the market is. Now, I'll step back for a second and say this. A lot of the leading experts are predicting continued changes in the market. And some are even saying even if inflation tamps down, which it currently has tamped down considerably, even if it continues to get to what the Fed's tracking towards or looking for, which is 2% or less, unemployment is still incredibly low, which is a good thing, right? People have jobs, they're employed, they're being paid more than they've ever been paid for, all these kind of good things, right? But it's problematic for the economy in terms of it continues to drive inflations and these sorts of things. So what goes up will come down. In the case of unemployment, what goes down will come up. And as that comes up, that would certainly reduce the buyer energy inside of the market, but it would also increase the seller. It would increase the inventory. If people start losing jobs, maybe they've bought houses that they're too much for them, or they're losing a job in one city and need to move to another city, they're going to have to sell that house. So in either one of those cases, if we see unemployment rise, we're going to see more houses come for sale. That increase of inventory will impact the market. So for those reasons and others that you or I probably don't really understand, there is a prediction, a possibility that the housing market would decline in pricing, which is what everybody always worries about, right? Everybody's always concerned, well, is my house value going to go down? Or if you're in the buyer side of the market, like, should I wait for pricing to go down? Or if I'm a seller, should I sell now because now is the absolute peak? So I just want to answer those couple of questions really quick, at least give my opinion on that sort of stuff. Do I think pricing will fall? Some of the numbers I've heard is 10%. It's the biggest number I've heard. So I'm going to start with that. To start with the biggest worst case sort of scenario, pricing will fall by 10% over the next 12 to 18 months. All right, so let's just assume that that's going to happen for a second. Okay. Sidebar. I don't think that's going to happen in the Atlanta metro market. I think if we do feel a downward trend in pricing, it's more in the 5% range. But let's just go with kind of a quote doomsday scenario. I ran some numbers because I think numbers always tell the best story, right? And what I did is I looked at mortgage rates. So currently today, interest rates are hovering around 7%, 7.2, 7.1. They might slip down with some discount points just shy, but let's call it 7%. If you were to buy a house today, average price in the Atlanta market is $450,000 at 7%, your monthly payment's $2,812. That's what everybody cares about, right? Monthly payment. Obviously, this is based on 20% down, $4,000 in taxes, $1,000 a year in homeowners insurance. I'm not a lender. I don't have to have all these asterisks attached to things that I say. This is just back of the napkin math on a mortgage calculator. I think it's mortgagecalculator.org. So play with the numbers yourself. Bottom line, this is the simple math that what we're looking at. Okay, so I want to think about if I'm a buyer and I'm thinking about buying, one of the questions we often hear is, well, should I wait for a crash? Should I wait for a downturn in the market to save some money? And first of all, I think most buyers are making a decision driven by lifestyle, driven by a life event, driven by something to try to improve their scenario or save some money. Like, it's usually not this conversation that really should be driving the decision-making process, but I understand how this conversation does matter and it's part of the decision-making process. So with that said, let's continue down this path. Two different scenarios I want to look at. Let's say the market drops by 10%. Okay, let's say that the housing value drops by 10%. We go from 450 down to 405. Well, also people are predicting interest rates are going to continue to climb. Like I said, the inflation is still at 3%. It's like 3.6 in the Atlanta market. The Fed is likely to continue to raise rates maybe one or two more times or something like that. So it's highly likely, it's more likely than not, that rates could get up to 8% or more within the next 12 to 18 months. So let's assume prices drop by 10%, and then let's counter that with interest rates have gone up by 8%. Your monthly payment, it's a better price, but it's not a whole lot different, right? $27.94. It didn't really change a whole lot. Let's split the difference. Let's do another scenario. We'll say the housing prices have only come down by 5%. So we wait a year as a buyer. We wait a year for, came down 5%. Yes, we paid $425 versus $450, but we're still going to be paying an 8% rate, maybe even more. At that calculation, our monthly payment's actually $29.11. So we're paying more per month than if we'd have just bought now, even though we would have paid a higher price. Now, to $28.12, $27.94, $29.11, we're within about $100 range here at window. Probably isn't moving the needle a whole lot. Wasn't the point of my conversation. Here's the point of my conversation. Interest that you're paying is far more important than the percentage of increase or decrease in pricing in the short term, right? Because when we think about interest that we're paying, we have to think about it in long-term terms, right? The interest, we're going to live in this house for probably 5. Most people kind of hunker down for about 10 years. I think the national average is 7 years, but I like 10 years. That's probably, if you're thinking about, and this conversation should always be about wealth building, right? That's what home ownership is all about. Instead of paying a landlord rent, I should be paying myself rent. I should be borrowing the money. I should be building wealth, getting equity, getting appreciation, all of these good things, tax incentives, blah, blah, blah. These are really important things. And when we're having that conversation, we're not talking about what's the price of the home to buy or sell this year versus next year. It's what is my cost of ownership today over the next 10 years of ownership. Okay. And the largest, by far, the largest factor in that question and that equation is the interest that you're paying on your mortgage. Period. The end. Okay. Just let me throw a little shock and awe at you for a second. Not everybody thinks about these numbers, but I do. I won't give myself my own spoiler alert on what I'm trying to convey to you guys right now, but these three scenarios, the total interest paid over 30 years, over the entire life of the loan, ranges between $502,000 and $560,000, just in interest over the course of 30 years. It is what it is. There's a reason that the banks have the biggest buildings in all the downtown cities on the entire planet. But I digress. Okay. Listen, here's what I really want to focus on. Let's talk about the first 10 years of ownership. It's likely that you'll be selling the house probably in the 7 to 12 year range. So how much interest are we paying? Back to these three scenarios. We buy today. Maybe it's the height of pricing over a 5-year, 6-year period, right? It's the highest pricing that you could possibly pay in the near relevant times. $450, but we get it at 7%. Versus we're going to wait a year for pricing to drop 10% or maybe 5%, but we are going to pay higher interest rate at 8%. Okay. What's the total interest? Well, in that first scenario, buying today, we're paying $236,000. Okay. Second scenario, it drops by 10%. We're paying $245,000. We're paying $9,100 more, right? If it drops just the 5%, which is what I think the Atlanta market is more likely the Atlanta market's going to suffer less, right, than other markets. We've always been less volatile. We have a lot of good things going for us in the housing industry right now, the economy, all these kinds of things. 5% is probably a more realistic number. In that scenario, you're paying $21,000 more in interest than you would if you had bought today. So if we're having a conversation about wealth building, about what's the long-term investment strategy in home ownership, right, I think the conversation really needs to be around those numbers, right? I think you need to be thinking about that long-term interest that you're accumulating. Now, you can offset that with other ways. You can pay your mortgage down faster. But again, if you're going to do that at the higher rate, you can probably do it at the lower rate. And when it comes to a cash flow, like what's my monthly payment versus what am I able to pay extra every single month at the lower interest rate, you're impacting that number even more than at the higher interest rate. So, at the end of the day, like I said before, the driver for buying and selling residential real estate, 99.9% of the time, is a lifestyle driven thing. It's a life event. It's a lifestyle. It's something that's about you. It's personal. It's about your family. It's a benefit that you're trying to create, or, long-term planning. The long-term financial, wealth piece that we always talk about is part of the equation. But if you're not thinking about the long-term component of how interest, especially these rising interest rates, are impacting that, that's really what I'm pressing on everybody to kind of think about. So as a recap, the market update, market in Atlanta is strong. It's different. It is cooled a bit, but like I've joked with people, if you're talking about it's cooler than the surface of the sun, even if you're 15% cooler than the surface of the sun, you're still freaking hot, right? So that's kind of where we are. Things are alive and well, but we are on a trend towards a more balanced market. And so I think more than ever, you need to be mindful about the decisions that you're making. Get some good advice from people that know what they're talking about, real estate experts, like those who are part of Community and Council Realty Group. We've been doing this for a very long time. We are in this every single day. The nuanced differences between the decisions that sellers make and the decisions that buyers make as they're preparing themselves for getting into the market to buy a home and sell a home, they're making a bigger difference today than they ever have. And of course, being guided by a professional who works in this market every single day, who knows the conversations, they know the temperature, they know the motivations. I think now more than ever are the biggest asset that you have in a real estate transaction. So if we can help in any way possible, even if it's just answering a simple question, digesting some of this information I threw in front of you, or just providing some resources. We know lenders, we know attorneys, we know home inspectors, we know home repair companies, you name it. We've got all that stuff covered. Be happy to be a resource for you. So I hope you're having a great summer. We've got some good plans lined up for the rest of the year, and I hope you're well. Take care.